In this video, we will be going over my expectations for Tesla stock and the broader markets this week. As I have already reported to you, if you are a viewer of this channel, there are cracks starting to form in our markets. February tends to be the second worst month historically, with an average negative return of 0.1%, dating back over 100 years now for the S&P 500. So February is a rough month. A lot of that probably has to do with taxes and selling stock and this sell and may go away narrative. People starting to sell some stocks could make sense in February, especially considering you're pushing up to 5,000 on the S&P 500. 500 on the SPX if you track the S&P using that, and there is a lot of sell orders right at about 500. We could be pushing into resistance, at least in the short term, that could give us a little bit of a pullback. But I think whether or not we actually do see a pullback this week or over the next couple of weeks comes down to the economic data and earnings. By the end of this video, I will give you an exact price prediction and where I expect Tesla stock will trade in this upcoming week. So let's start off this video by taking a look at the option activity in Tesla. Now, I want to do this first because by the end of this video, after we go over all the data, all of the earnings, what Fed Jerome Powell could say today that could move stocks, I think it's important to take an arbitrary kind of look at what markets are expecting or pricing in. Now, based on the option chain currently, markets are pricing in a plus or minus $9 move for this week. Now, let's take a look at the option chain via the bubble chart to see if that makes a little bit of sense. So $9 higher from here is going to put Tesla stock at about 196, and $9 lower from here is going to put Tesla at about 178 or so. So if we take a look at what we're currently looking at here in the options market, indeed, the largest put lines up with that. With the 180 strike, you had volume on Friday of 68,000 with open interest of about 13,000. So we'll see if the volume on Friday actually translates into a higher open interest. If that happens coming on Monday, then it was not just traders, but more swing traders, right? You can get a lot of day traders that trade options on an intraday basis that get in, get out. They don't hold those contracts in open interest. Open interest is contracts that were bought and held. So coming tomorrow, I will update you guys, especially those of you guys in the trading community. And if we take a look at the highest contracts as far as open interest in general, it's the calls up here. The 195 call with open interest of about 19,000, volume on Friday of 38,000. So that's pretty much in line with the plus or minus almost $9 move that we are expecting. The 200 call has the most open interest on the entire option chain for any contract in general, and that has 19,604 for open interest and volume of 46,000. But what's actually pretty interesting is the 190 call had a lot of volume on Friday. Like, this is a lot of volume no matter what's going on in Tesla. And the open interest was very low. So it looks like there was a lot of people trying to trade Tesla, potentially swing trading Tesla as well. Again, we'll know that coming tomorrow morning once the open interest numbers do update. But for the 190 call, we had 96,000 for volume. So 96,000 contracts were traded at the 190 call. All of these options expire by this Friday. And you do have open interest of about 7,000. So if we start to see that open interest number really populate, in other words, get higher coming on Monday, then you could see a lot of potential buying pressure around 190 if Tesla stock does start to make its way to those prices via the gamma hedging that market makers have to do. Think about it like this. If you have the right to get shares at 190. If Tesla goes to 200 by the end of this week, you're going to make a lot of money. Market makers, they take about 95 to 98% of the back end of these options because that's too risky for a lot of firms to make a short-term bet on Tesla stock. So market makers have to do that. Well, market makers, they're not going to take a massive loss so you can take a massive win. No, market makers go out and hedge their position. So if they have to give you stock at 190, they may go out and buy Tesla stock at 189.95, right? To make a couple cents when you exercise your options at 190. Hopefully that makes some sense, but that is where you can get into a gamma squeeze-like event. Some people call it gamma hedging because, that's what the market makers have to do. It is the market maker's job to create a market. Now, the next big catalyst that we have really for our markets is going to be happening today, and that is Jerome Powell on 60 Minutes. If he says anything that has implication for Fed policy, good or for bad, I'm sure markets will react to it. Investors like Gene Munster have said the next biggest catalyst is Jerome Powell. So a lot of people have talked about this, and they are looking forward to this, and I yet don't have exactly what was said from Powell, so I'm sure we'll get that information at some point tonight. If not tomorrow, markets will be reacting to it. So as far as the option market currently and what we're expecting, $9 plus or minus, that looks pretty appropriate as far as where some of the largest positioning is being held on Tesla stock. Now, what's actually interesting though, if you factor in the break evens of, let's say, a $200 call on Tesla, then you are substantially higher than your $9 plus or minus. So in all reality, people are actually expecting quite a large move for Tesla stock this week. Now, whether or not Tesla stock actually does move big, if this is a good or a bad week, I think that's going to come down to, again, Fed Jerome Powell, but also some economic data this week. And you really don't have to wait long because on Monday, you're going to get ISM services PMI. Now, service inflation and housing inflation, those are the two biggest categories the Fed still needs to fight. Now, ISM services PMI, the headline number is expected to come in around 52. Last month was 50.6. So you're expecting an increase there. That's not exactly going to be seen as terrible because it's really just showing the service side of the economy would be doing well at that point, or at least better than expected. Now, we could come in way higher. That's all going to vary. It's really the individual data, not just the headline number that is important. The ISM service business activity, the better or the higher, the better there. ISM services employment, again, the higher, the better there. Powell made it very clear the economy can do well. The labor market can do well as long as inflation continues to fall. The big one that you really want to be watching is ISM service prices. If this comes in with a big beat and let's say everything else does well also, that's not going to be good because the services prices is really the inflationary side of the services report. Now, you're expecting this to come in line with expectations, which I find interesting. And the same as last month at 57.4. That's what we're expecting this for January as well. So everything else is expected to do better on a month-over-month basis besides the prices for services. If prices also rise, that's going to be more reiteration that we're probably not getting rate cuts for a while. That's going to be some of the biggest data. And again, that does come out tomorrow at 10 o'clock in the morning. Now, on Tuesday, you're going to get Fed Mester at noon. Total household debt at 11 o'clock in the morning, expecting that at around 17.3 trillion with a T, trillion dollars. On Wednesday, you're going to be getting a lot of data out of Europe, tons of data across the board. Whether or not that moves our markets, that's really highly unknown at this point. But Wednesday, you are going to get Fed Kugler that will speak at 11 o'clock in the morning. Fed Barkin at 12:30. 10-year Treasury auction at 1 p.m. That will be important to see how demand is coming in. If people are looking to buy the Treasuries, then yields are going to fall. If people don't show up to that auction, well, yields are going to rocket higher. And that is, again, Wednesday at 1 p.m. So be on the lookout for that. And Wednesday at 3 p.m., consumer credit change, expecting consumer credit is going to jump about $16 billion for the month of December. And generally speaking, the higher that is, probably the more implied activity we're seeing out in the economy. Now, on Thursday, you're going to get initial jobless claims expected to come in at 220,000. Wholesale inventories month over month expected at 10 o'clock in the morning on Thursday, and you're actually pricing in a positive 0.4% reading there. Last month was negative 0.4%. And then Fed Barkin will be speaking at 12:05 p.m., so around noontime on Thursday. And then on Friday, the employment rate out of Canada, it's highlighted in red like it will move our markets like a big volatility catalyst. I'm not certain that it will, as long as you don't see a big, up or down move in unemployment, then you will definitely see things move around quite a bit. But that is it for this week as far as economic data, and really Powell today is going to be very important. So if he drops any kind of big news, I doubt he will, but if he does, I will bring you that information later on tonight. Another big highlight of this week is going to be earnings, and again, tomorrow morning, you're going to get Caterpillar, McDonald's, and ON Semiconductors, as well as Estée Lauder. Specifically, Caterpillar, McDonald's, ON Semi, Estée Lauder, they're all going to affect their own industry. So this is not going to be a week of earnings really affecting the broad markets all too much, but you just want to watch the industries, right? McDonald's will affect food, Caterpillar will affect manufacturing companies, and maybe metals companies. ON Semi will affect semiconductors. You get the idea. Palantir, Monday and after hours, and NXP will affect software. Specifically, Palantir may dramatically affect software companies. Tuesday pre-market, Eli Lilly, Spotify, Fiserv, Hertz, BP, Toyota. Toyota could affect Tesla as well as Ford Tuesday and after hours. You will also get Enphase, Snapchat, Chipotle, Elf, and Fortinet that will be reporting earnings, with Snap, Enphase, Ford, Chipotle, and Elf being your main players there. Snapchat can have an outsized effect on bigger tech as well, especially advertising companies, really down to their guidance and how sporadic it can be. Sometimes Snapchat says the weirdest things on earnings. So we'll see if that happens again, if that does move a Meta or, Alphabet, stocks like that. Wednesday pre-market, you will get Alibaba that will report earnings, Uber, CVS Health, Roblox, XPO Logistics. Wednesday and after hours, PayPal, a fan favorite there, Walt Disney, Arm, and Wynn Resorts, as well as Paycom, Mattel, and Anali, I believe that's how you say that one. Thursday pre-market, ConocoPhillips, Spirit Airlines, Hershey, Lightspeed, Aora, and a couple other names. Thursday and after hours, Affirm, Pinterest, Cloudflare, Dexcom, Expedia, CleanSpark, Bill.com, and Take-Two Interactive. And then Friday pre-market, Pepsi, Canopy Growth, Enbridge, AMC Networks, and some other companies as well. We do have quite a jam-packed week as far as earnings. Your big tech names, your trillion-plus dollar companies, they are all pretty much over with, but you are still going to get NVIDIA, which will report earnings later in the month, which will obviously be important for semiconductors and for broader markets. I imagine NVIDIA's numbers are probably going to come in good, and if anything, that could be a positive catalyst for markets. Now, if we take a look at Tesla stock on a technical basis, the stock has been finding a lot of support around the low 180s. It seems like every time we get down there, we tend to bounce. On Friday, you bounce at about 182. On Thursday, you bounce at about 184. The day before that, you bounce at about 185, 183, 182. 180. You get the idea. There's a lot of buyers that feel comfortable buying Tesla stock in the 180s, especially in the low 180s. You get a lot of buy orders that are coming into the stock. Now, the stock's having a problem breaking out above the 190s and specifically holding a close there. Since we entered into the 180s, you have only closed above 190, technically 2 days, and then right after, you've gave it back again. So there's a lot of activity here in the 180s. A breakout above there into the 190s, a close in the 190s could send the stock even higher. But unfortunately, we are running into a lot of sell orders here around 500 on the SPY. That's a bit of a problem, because if we do get some weakness here, Tesla stock is not in a very good position to be able to weather that weakness. Even on the RSI, the SPY is sitting at about 69, which is getting back to overbought territory. Now, I think the biggest problem that we are going to face in our market is simply the repricing that will have to happen. If we get bad or hot service inflation data coming out tomorrow morning via the ISM services, you are going to see stocks yet again have to factor in we may not get a rate cut in May. Now, we are going to get 2 more jobs reports. We are going to get 2 more CPI reports from now until then. So there's a lot more data that will be coming out, that's for sure. And the situation evolves day in and day out. If data shows inflation remains stubborn here, then, I mean, stocks are pricing in 5 rate cuts right now for 2024. Odds are you're probably not going to get 5 rate cuts. You may only price in 1 rate cut. You may not get a single rate cut in 2024. The can may get pushed, the can may get kicked further and further and further down the line. And that is going to be a massive problem for stocks. Now, we're almost pricing in 1, 2, 3, 4 rate cuts in 2024. And the less rate cuts that we can price in, that start to get priced in, the ultimately better or easier it's going to be able to handle hotter than expected CPI data. But hopefully, I mean, if you are bullish, if you want to see stocks continue higher, if you want to see Tesla stock continue higher, at least here in the short term, you definitely want to see your inflation data come in better than expected and not showing a reacceleration. With that being said, I do think Tesla stock can act a little more independently than the broader markets, considering Tesla stock's already down 25% plus year to date. You could actually see quite a bounce at the same time the broader markets are falling, because what has happened is money has pooled from other areas of the markets into big tech. If you see the markets give back, I think it's mostly going to be in your big tech names, stocks that have ran up a lot. Meta may give some of it back. Google might give some of it back. Amazon, Apple, these stocks, right? Nvidia, for that matter, semiconductors, may give some back. Tesla could be a prime beneficiary to see some inflows, considering Tesla has an RSI of 27.60, and anytime in the past Tesla's hit oversold on the RSI, you have bounced 30 to 40%, typically within the course of a month or 2 months. Right now, you've been docile on the RSI under 30 since January 17th. Now, we will be getting as well delivery numbers or insurance registration numbers out of China coming on Tuesday, and if those numbers come in better than expected, you could again see Tesla stock benefit quite a bit from that. And my opinion is Tesla stock could easily hit around 203 by the end of this week if things go well, and as long as we don't see a disaster in the broader markets themselves. Now, I think if we do get some downside here, your 180 level is probably going to be, again, that level that we can test. I don't think we're falling under 180 this week unless we've seen some kind of utter disaster from the ISM data tomorrow morning or from Powell later on tonight. I just don't think that's really in the cards to drop down to the next support, which under 180 would be 170. That would be like the worst case scenario, I would think, for this week. But 180 could definitely be in the cards. And if you can't see it, if I have to just say it, the upside could be a lot more from here. 203, 205, that would be the next level of major resistance that would be targeted. That is where you would fill the gap to the upside, and I think it's only a matter of time. But you know what ultimately causes us to get there, we'll have to see. The biggest threat to Tesla is if we start to get more price cuts in the US. Tesla did just cut prices in Canada, so I mean, to see a price cut in the US looks a little bit more likely at this moment in time, essentially. So again, I am firmly more bullish than bearish for this week. Have I been wrong before? Of course. Tesla stock could have a red week. In case that does happen, I would set targets around 180. Any kind of move lower than that, you're setting yourself up for probably a $10 move down to 170 pretty quickly. I think the selling has really been overdone at this moment in time, though, and I do think a larger bounce is likely in the cards this week, targeting around that 205 level. Could you go higher than that? Of course, but I think you would need some really good company specific news for Tesla to actually see that happen. Now, 205 from here would put Tesla stock at about a 9-ish% gain for this week. 203 would put Tesla stock at about an 8% gain for this week. To fall down to 180, that would be a drop of about 4.25%. So about double the upside I think is possible this week compared to the downside. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us, check out that link down below in the description of this video as well. You guys have a fantastic rest of your day and your weekends, and I will see you in the next one.